Hey guys, how's it going? Yeah, you guys enjoying the conference? Pretty cool, huh? Yeah. All right, so I want to first start by making sure my clicker is working here. Hold on. There we go. So brokers are better. Would you guys agree with that? Would you guys agree with that? All right. So here's why in my minds brokers are better. It has to do with a structural issue between, I have spent probably 22 years of my career building lenders that support brokers. I've primarily been focused on brokers, but there have been times in my career where I've been dabbling in retail. Just so don't hold it against me. Just a little bit of time. And what you find is in a retail type company where the originators work for the company, you don't have the right focus. And what I mean by that is oftentimes the corporate side of the business will tend to focus more on what's being spent at the producer level. They'll spend, in fact, all of their energy in micromanaging the producer. And you actually can't blame them because it is most of what the cost structure is in a retail company, right? Whereas if you look at wholesale, everyone's focused on the right thing, right? You guys are empowered to run your business the way you see fit. And that means you're accountable for the money you spend. And what that does is that frees up the lenders, right, to be able to focus on making the platform better for you. And that's why we're going to continue to see the market share in wholesale and brokers will continue to increase. But, and I don't want to be Chicken Little here, there's my title, we have to make sure that we start thinking about the world differently. What's going on right now, while it's fun and it's awesome and I'm proud to be a part of it and I'm proud of everyone in this room, it's also, in a way, not sustainable. And it kind of ties into a lot of the themes that you guys have heard here today, and I'll weave that in through my presentation. But it's not sustainable. Specifically, what I mean by that is it's not enough to grow market share. We also need to retain it. We have to retain it, right? And so lenders and brokers and servicers need to start working together in a way where it's economically beneficial for everyone, right? And we're creating a better platform that retains our customer long term. Okay, so just, sorry, I went a little fast here. So a little bit about HomePoint, real quick, to give you context. And so I joined HomePoint about a year ago. HomePoint is 100% focused on broker, 100% focused on broker. In fact, about a year before I joined, HomePoint sold the retail division so they could focus on broker. The other thing that's significant is that HomePoint also retains 95% of the servicing on the loans we originate. And so that uniquely positions us to work with both the brokers and the lenders in this room to figure out a better way to retain our mutual customers. So I'll start by asking this question because I do think it's fundamental to the problem we're discussing here. How much would someone pay you for your business? Have you guys ever thought about that? Have some of you actually tried to sell your business? And so maybe you know. And so I'll tell you, for those of you that have not, you would be lucky to get book value for your business. And by book value, I mean someone that would pay you, money for the cash in your bank account and buy out your tangible assets like your furniture. You would be lucky, right? And why is that? Because what you guys do is meaningful. It's very meaningful. You're putting people in homes. That's meaningful. Yet, if that's a good indication of value creation, why is it that you wouldn't be able to get more than book value for your company? We actually talk about this a lot at HomePoint. The insurance industry is a good analog for what I'm trying to say here. If you look at the insurance industry, insurance agents, excuse me, will spend a lifetime creating customers, right, and building this portfolio of customers. Every year that customer renews their policy, when they renew, that insurance agent is getting a portion of that. And so over time, there's this cash flow that's being built up, this annuity, to the point where, when the insurance agent's tired and wants to, go live on a beach in Mexico, they can sell their business at a multiple, at a premium, and they're out. Take another example, like some of the most, highly valued companies in the country right now, Amazon, Lyft, and Apple, to name a few. What are these companies doing to create so much value, right? These companies are highly valuable. And if you boil it down, and you guys are probably all customers of these companies today, they're really good at trapping people in their ecosystem. So when a customer enters their ecosystem, they're interacting with them on a frequent basis, and that interaction reinforces a relationship, and over time, they're trapped. I mean, I literally get like 3 boxes a day from Amazon, and I don't remember ordering anything. Like, it's that bad. And so again, what are these companies doing that we're not? And I think it's really as fundamental as this. Mortgage originators are highly transactional. And transactions result in one-time revenue opportunities. They're not creating lifetime revenue streams. And hopefully you understand what I'm saying. What you're doing is incredibly important. You are putting people in homes, right? You're helping them finance what's likely the largest asset that they'll ever own. That's extremely important, right? It's meaningful. But if you think about it, when you put a borrower in a home, it might be 3, 5, 6, 7 years later that you have another reason to interact with that borrower in a transaction. That doesn't mean you're not. A lot of really good advice being given up here in terms of how you promote your brand and build your brand and create awareness with your customers. I get that. That's extremely important. But it has to be reinforced with a transaction. And so if you're only having a transaction with a customer every 5 or 6 or 7 years, that's not enough to reinforce and build a trusted relationship. Right? You guys follow me on that so far? And so how do we fundamentally change that? Right? Is really what I've become interested in over the last few years, because I think it does require us to look at our industry a little differently and how we work with one another. And it starts with understanding what is resulting in terms of current performance. And so when I joined HomePoint, they weren't doing anything with the servicing portfolio. So the servicing portfolio that was attributed to wholesale was basically uncultivated, meaning we weren't helping or hurting, right? So we weren't promoting you with the borrower, but we also weren't soliciting the borrower. So it was a perfect opportunity to understand, in an unfettered way, what the performance of broker is from a recapture standpoint. And so what we did is we went and we bought a bunch of data, and we can use this data, it's actually really creepy, to track these loans back when they pay off and see where they went. And so at the time, the population of the data was about 70,000 loans. And of that 70,000 loans, we saw roughly 1,479 loans, exactly, 1,479 loans pay off over that period of time. We saw from those 1,479 loans, 208 were recaptured by the original broker, you guys in this room. And so that's a 14% recapture rate, 14%. Josh is shaking his head. So think about the best consumer direct company in the country and call that best in class. Do you think, in fact, I'll get people to raise their hands, who thinks that company recaptures above 30%? Let's get less hands. Okay, what about above 50%? Okay, how about 70%? Oh, there you go. You're cheating because you saw me in Florida. Best in class recapture is 70%. If you look at who you're competing against, and these are primarily really sufficient, well-run consumer direct companies that have these massive marketing budgets, or it's these retail companies that are tied to servicing portfolios such that they can combine the efforts of the originator and the servicer. You can get upwards to 70%. So there's a 56% gap between what brokers are currently able to recapture and what best in class is. And so anyway, so after this, I actually presented this at the Florida show, so some of you may have already seen this. And afterwards, I had a few brokers come up to me and say, man, look, I know I'm doing better than 14%, which is, I get it. Like, some people are going to do better, some people worse. But it got me thinking, from your standpoint, like, how do you know? Like, you don't really see this problem. It's not in your face. Servicers see it because we have to pay for the financial consequence of what's going on. But you guys can't see it. And so I got back, and we, from that point, started working on building what we're calling a client recapture scorecard. And so this is going to be launched in Q4 of this year. So any approved client of HomePoint is going to be able to log into our system, and you're going to be able to see a client recapture scorecard. And to be clear, this is going to show you all loans you originate, right? Not just the loans you send to HomePoint. Basically, for the last 5 years of production, right? Any loan that you've originated, we're going to show you these 3 key data points. 1, how many of those loans actually refinanced since you've originated them? 2, we're going to show you how much you actually were able to retain. And 3, we're going to show you if you didn't retain them, where they went, right? They went to someone else, okay? Now, I actually tried to show you where they went. I was trying really hard to show you the lenders that these were going to, but the company we buy data from was like freaked out by that and would not let me do it. And so the best I was able to do was break it down by type of company, right? But you guys are pretty smart. I mean, if you know you're selling a lot of your loans to a wholesale lender that has a large consumer direct arm attached to it, and you see in the data that a good chunk of those loans that you're not recapturing are going to consumer direct, you can probably put 2 and 2 together on that. The last thing on this, and I thought this was really important, is I want to make this personal, right? Because this isn't a fight. This is about economics on your side, the lender side, the servicer side. It's impacting us all. And if you look at the impact of the current level of recapture rate versus what best in class is and the amount of money it means to you guys, it's huge. It's huge. And so in this example here, this is a $15 million a month shop, right? It's a fairly decent sized broker, right? The delta in recapture, right, of achieving, right, the best in class recapture rate is $1.2 million over that 5-year period. And so go back to my original question, what would someone pay for your business? If you're able to show a steady income stream and consistent recapture rate, what does that do? What does $1.2 million do for you? Just, what can you invest that in to grow your business anyways? And so it's a pretty big deal. And so with that, what's causing the gap? What's causing it? So now we have a way to measure what's going on, right, objectively. What's causing the gap, though? And so I actually got a little too creative at the Florida show. I was trying to get all techie on you. You did, listen. I was trying to get all techie on you and explain these consumer direct strategies that are resulting in 70%, because it doesn't happen on its own. It's actually a very complex thing that's data-driven, and it has to do with speed and being able to service the customer when they want it, right? But it's actually not that complicated, is what I realized. At the end of the day, the thing that's causing the gap is we're not working together, period. We're not. We're spending all of our time fighting over whose customer is whose. And we all have a part in servicing that customer. It's really no one's customer if you think about it. The choice is theirs, right? And so brokers are great at relationship development. Now, you guys heard this on the stage all day today, is like, how do you build your brand? How do you build your brand? How do you focus on not the transaction, but building a relationship? I think that was something that Gary Vee said, right? You guys are great at that. That's your role in this equation. Servicers, on the other hand, are not as good, I'll say it kindly, are not as good at relationship development. It's a company servicing a loan, it's not a sexy thing. But we also have a lot of meaningful interactions with our mutual customers, meaningful interactions, right, that matter. And so I believe the solution, what we're setting off to do in HomePoint, is think about our market a little differently, the industry a little differently, and how do we instead stop fighting about whose customer is whose and start working together, right, to mutually retain that customer. And so the way I want to, because it is kind of complex, I'm trying to illustrate to you guys what I think the future looks like. And so what I've done here in this presentation is we've actually broken up a couple examples of a phone interaction we have with a customer. And I'm going to kind of narrate as we go through it and give you guys a better understanding of how that evolves over time.
Mrs. Cooper, now that I've processed your payment, is there anything else I can help you with?
Yes, actually. I've been hearing that interest rates have dropped. Should I be looking to refinance?
Yes, Mrs. Cooper. I do see that you could benefit from a refinance.
Okay, so a few things on this. We tried to use Mr. Cooper, but our legal department thought it was inappropriate, but somehow they were okay with Mrs. Cooper, so there you go. The second thing is, all right, so with really the exception of HomePoint, right, any large-scale servicer gets this call, the first thing immediately they're sending that call over to their consumer direct division, who on the phone within 5 to 10 minutes will lock, app, take a deposit, and start them down the path of refi, which they will be done with in 14 to 20 days, whatever it is, and they're lost to you forever, right? That's a big part of why that gap exists between 14 and 70%. The third thing I think that is significant here that I don't think most people appreciate is just how often, how frequent this type of interaction is, and the scale of opportunity that we have if we could actually start partnering to take advantage of it. In fact, I thought it was so significant, I wanted to show you HomePoint's numbers. And so if you look at HomePoint today, HomePoint services 220,000 customers today. So we've grown since I've joined. And that servicing portfolio is split really into two. And so there's around half of the servicing portfolio has come from brokers, people in this room, and the other half of that servicing portfolio has come from large-scale correspondent lenders, where we're buying the servicing in bulk, okay? Now, in order to participate in correspondent, you have to have some recapture capability, because in correspondent, I don't know who the originator is. So I can't partner with them in any sense. And so we've used this as an opportunity to do really a few things. One, we've built an internal recapture group that is focused on that correspondent business. We're using that to learn the techniques that we want to then apply to you, where we can actually say, look, here's how we partner together and leverage these consumer direct capabilities to actually achieve that 70% together, right? And so to give you a sense for just how significant this is, this group today is doing about $80 to $90 million a month, and 70% of that volume is coming from these interactions. No marketing whatsoever. 70% comes from these interactions, right? To further illustrate my point, we get 200,000 phone calls a month. 200,000 phone calls a month, which is like crazy. It's crazy when you think about it. We send 350,000 pieces of mail, and this isn't marketing. This isn't marketing. These are meaningful things that the borrower is going to open, like their year-end tax statement, their 1098, their payment letters, their escrow analysis, their ARM reset letters. These are things that you send in normal course of business when you're servicing loans. We have 275,000 people log into our sign-ins, distinct sign-ins, to our servicing portal every month. 275,000 people logging in to make a payment, to check their balances, whatever. We have 75,000 people visiting our corporate website every month. So all in all, it's 900,000 touch points that we're getting off of this 220,000 customer base per month. 900,000 touch points. So when you break that down, 11 million touch points per year, or 50 touch points per client per year, that is a lot of touching. Do you guys see the significance of that? That's a lot of touch points, right? And so this I think says a few things. One, do you see why these large-scale servicers are so interested in acquiring your clients? Right? Do you see the economic equation here? They want these clients because they know, built in right away without spending a dime, without sending any marketing, they're going to have 50 opportunities per year to do something with that client. Okay? The second thing is, do you see the opportunity that we have? It's a huge opportunity. So, with that, how do we leverage the opportunity? It starts with, I'll say this here. So we actually, just to give you some background on this, we spent the last year building our own customer portal. And so actually it launched on October 1. Since October 1, customer portal has gone from 0 users to 45,000. We have to move them from current portal to new portal. In just was that 1.5 weeks, or almost 2 weeks, 0 users to 45,000. That's how much engagement we have. And so what we're going to do with that portal is we're going to understand, as we understand the usage, right, how customers are using it, how they're reacting to the content, we're going to take every opportunity to reinforce you as the trusted advisor. Every opportunity. All right, so if you look at here's an example. So this is actually one of our brokers, Cody. Cody in the room? There he is, right there. I mean, look at Cody. Look at him. He's ripped, man. You don't want to give him a loan? I'm just saying, someone wants to give Cody a loan there. So the other thing that I want to point out here is this is not something that we're going to do for 3 months, for 6 months, for 12 months, for 18 months, for 24, whatever right? We service the customer for life. So we're not originating these loans and then over some period of time when it's convenient for us selling them to a servicer, right? We're going to retain these guys for life. That is our business model. And so you will be part of this interaction in helping us collectively build a trusted relationship with the borrower for life, for the life of the loan. All right, there we go. Yes, thank you. All right, now, but that's not enough, right? So that starts the relationship development. You know, you guys are reinforcing it with what you're doing in terms of your marketing and social media and all the stuff, the cool stuff you just learned from Gary Vee and all that. We're reinforcing your relationship through the meaningful interactions we're having with the customer. But let's go back to that call scenario, right? Because that call scenario, believe it or not, is where most of the transactions are coming from on these consumer direct lenders. And so here's how we envision this call scenario going in the future.
Mrs. Cooper, I'm going to send you a link to start the pre-qualification process and quickly tell you how much you can save in just 7 simple steps. It should only take 5 to 10 minutes, and I can stay on the phone to answer any technical questions you might have. Would that be okay?
Absolutely.
Mrs. Cooper, do you want that link sent via text or email?
Text is fine.
Okay, the text has been sent. Please let me know when you've received it.
Got it. I'm opening the link right now.
I see that you originally worked with Cody Stevens from Capital Mortgage, one of our broker partners. Would you like us to provide this information to Cody so he knows that you are interested in refinancing?
Sure, I remember Cody. He did a great job.
Okay, so a few things to unpack on this. So one, again, see the reinforcement, right, of your brand, reinforcing the brand here. Two, if you study consumer direct, right, and you look at how these guys are getting to 70%, one of the things they figured out is that your chances of retaining a customer exponentially decrease the longer a call takes, and if they get off the call before they're satisfied, right? And so the part of this call that matters most, right, is we want to demonstrate to the customer, hey, this is not going to be a hard process, right? Most people, they don't want to go get a loan. They don't want to refinance their loans. It's a pain in the ass. It's only after the pressure builds to the point they see all the news about rates dropping, they're like, fine, I'll go get my tax returns, my docs, and do all the data entry and all that. As a servicer, we have 5,500 data points on average per customer. 5,500 data points on average. And those data points are the same exact data points that you need when you're applying for a loan. And so what we have the ability to do with your partnership is we can reinforce with them, dude, we already got your data, like just confirm it's good, and then let's go on, to the next piece. And the next piece is the piece that's actually most important, right? And that is, if that customer gets off this call, if they get off this call without understanding what's most important to them, which is value, how much does this mean to me? If you let them get off the phone without understanding, right, you're lost them forever. And I'm going to get back to that in a sec, because there's a big reveal. Let me show you. Compare that to what we do today, right? And so today, what HomePoint is doing is when these interactions occur and the customer says, hey, I'm interested in working with Cody, we'll say, no problem. We're going to have Cody connect with you, and we get off the phone with the customer, and then we send Cody an email or a text, right? And we hope that Cody gets that email or that text, right? We hope that he's not on vacation, that he's not sick, that there's some weird issue with a spam filter. We have his right number, we hope, right? We don't know it actually goes through. But regardless, there's going to be a delay in time. There's going to be a meaningful delay in time. Okay, and so once this customer gets in their head, hey, you know what? I want to refi. If they're not getting instant gratification and an understanding of what it's going to mean to them, the next thing they do when they get off that call is they open their web browser, they go to Google, and they type in refinance my loan. And what comes up, and you guys can do it now, is not you. You guys see that? I was going to zoom it in. I was going to get those airline sticks where you highlight stuff, right? That's not you. And guess what? It's never going to be you. It's never going to be me. Because the way you get there, you just spend $750 million a year on advertising. That's what we're competing against, right? We're in this together. And so let's see how we get ahead of that.
Okay, I just got my pre-qualification and it says my estimated savings are $345. That was easy.
Excellent, Mrs. Cooper. Your information has been sent to Cody. I will also follow up to make sure your questions get answered. Is that okay? Is there anything else that I can help you with today?
No, you have been awesome. Thank you so much. Have a great day.
Okay, we got to give them what they want. That's the short answer to the question. We have to give them what they want. We have your data, we have our data. There's no reason we can't. We have enough data to pre-qual them. There's no reason we can't pre-qual them right on the spot and say, here's what it means. And at that point, we're not talking about triggers. We're not talking about referral emails, anything like that. We're talking about basically a shovel-ready, full-blown application, right? What's more meaningful than that? Right, the conversion rate. All right, there we go. Yes, some excitement. Good. Okay. So let's recap. So from this customer's point of view, we're able to demonstrate, hey, you don't need to input your information. We got you. Just validate it's good. We're able to demonstrate speed, right? Speed. We're also able to show them almost real time, even though it's going to be an easy process, right? It's still going to require work on your end. You're still going to have to go through the process, and most people know it's not an easy one, and so here's why it's worth it. Here's value. Here's how much you're going to save, right? And then 3, and this is the piece that's most important, this is the piece that we're collectively failing at, is we aren't reinforcing each other's strengths, okay? Right, and which is Cody did a great job developing the relationship. The customer didn't pick us. Sorry, I hit my mic. Customer didn't pick us. They picked Cody, who picked us, right? And so that's where the relationship started, and that means something. It's a meaningful interaction that we need to reinforce. Just like when we're servicing a loan and we do a good job, right? We need to be able to reinforce that. And those two things combined together build certainty. The customer says, you know what, I feel good about this. I know this loan's gonna get done because Cody, he made sure it got done before. My loan's been serviced fine at Home Point. I'm good, certainty. Speed, value, and certainty builds trust. And trusted relationships are what result in lifetime revenue streams, right? And so I guess to recap, we have to start working together. We have to start, and this is what we refer to as customer for life. It's not a program, it's not a point in time thing, it's a different way of engaging you. It's a different way of looking at our customers, and it's not something that's like one and done. This is something that we're gonna have to work at over years to develop, right? And if we are so serious about this, in fact, we have $500 million behind this initiative right now. $500 million. We have 1,400 people that come to work every day. This is all they're working on. We sold our freaking retail channel, so we could work on this. All right. I know you guys are probably tired. That is, actually, I am right on time. I nailed that. I appreciate your time. Stop by the Home Point booth if you have questions. I'd love to talk to you more about it. Thanks.
Thanks, Phil. Good job.